But here's a cool idea. 2 years back, I met this man for the first time in person, and he told me he's working on a book with his boss, a Copcom leader, working on a book with his boss, who's the founder and CEO of the startup that the boss had built a few years prior, which I thought was a cool idea. And one of the reasons this person was in a better position to write a book is because he was a former journalist as well. So writing came easily to him. And the book was called, or book is called, you can buy that book as well online. It's called The Bee, the Beetle, and the Money Bug. How many of you have heard of a book like this called The Bee, the Beetle, and the Money Bug? It's a book written by a Copcom head and his boss, the founder and the CEO of the company. So next we have the co-author of that book, A.R. Hemant, who wrote this book with Adil Shetty of Bank Bazaar, to share with us in 5 slides and 15 minutes what they do differently.
Can you hear me? Thank you, Amit, for that plug for the book and this opportunity to talk about some of the things we're doing here. My name is Hemant. I represent bankbazaar.com. We are a lending and credit card marketplace. And the campaign, the case study that I'm about to talk about is an external communications one. Next slide, please. Okay. Yeah. So since we are a lending marketplace, most of our communications and public relations is focused on the 3 stages of the loan. So the 3 stages of the loan is, number one, you find the loan and you take the loan, which is about, finding the right lender, assessing your eligibility, applying for that loan and getting that loan. And the second stage is managing that loan. You have to pay your EMIs, you have to understand your rights and responsibilities. You have to understand how your loan impacts your household finances and your credit score. And the last stage of that is getting out of debt, which is about, refinancing, balance transfers, knowing your interest rates, finding the right way to pay off your loan. So all of our, most of our communications and public relations efforts are focused on these things, not just helping people find the right loans and credit products, but also helping them through that journey to being debt-free. And this involves a bit of high school mathematics, and there's also some macroeconomics here as well. And I'm trying to go and keep that at a minimum and focus more on what we did in public relations. The context that I want to set here is this graph that you see here is the repo rate. The repo rate is the rate at which the RBI lends to banks, and then the banks lend to you, banks lend to you and to businesses. And essentially, the story goes back to 1 year or 2 years after the pandemic. And we had been in a stage where, interest rates had fallen, economies were in recession. Banks were lending left, right, and center. There were loans for everything, home loans, car loans, personal loans, credit cards. And what this did was it created pretty much a bubble in every asset class. So home prices started soaring, gold prices started soaring, stock markets were booming, cryptocurrency was doing well. And when that happens, the event that follows typically is some kind of distress, which is what has happened in the years that followed. So, is it? Yeah. So that was the first stage. These are the 3 stages of our case study. The first stage was hard inflation is coming. Be ready, be prepared. There's going to be a lot of pain. And we were one of the first few companies to sound that out to the media in terms of what consumers needed to do. So we are telling people about where to find loans, but we are also telling them that inflation is about to hit you really hard. It means that your loan EMIs are going to go up, your loan tenors are going to go up, and you need to be prepared for that. So that was phase 1, which was 22 to early 23. 21 to early 22, and then phase 2, which is inflation has arrived. And that graph that you see there, it's looking very benign. So you have 4% at the left of the screen, and then it gradually tapers up to 6.5%. It doesn't sound like much, but that period was, period of great financial devastation everywhere. We saw NPAs ticking up, we saw defaults rise, we saw households in distress. And at that stage, we started talking about what people need to do in terms of managing their loans. And this gave us an opportunity to firstly, as a team, as a Copcom team, understand what we needed to say, understand how we wanted to interpret policy, understand what takeaways we can provide to consumers. So we started working on our own understanding. We started building tools to help us understand what was going on in the policy environment with these loans, with the lending market in general. And we started creating content pieces. So these would be authored articles, these would be white papers, these would be data sets. And these were very well received by the media and essentially helped us strengthen our position in the media in terms of brand visibility, in terms of domain leadership. And finally, there's phase 3, which is, winter has arrived, inflation has set in. This is hard inflation, and it's going to stay. And it's going to stay for a while. And it still continues. We're still in phase 3, and we're hoping that at some point the cycle is going to reverse, but it just keeps going on and on and on. And that also is a source of distress. And it also provides us at Bazaar opportunities to speak to the media about what we are going to do, what consumers need to do in terms of managing their household finances. Yeah. So this is some samples from phase 1, which is warning bells have started sounding. And this is where, interest rates and inflation is about to shoot up. And we said, beware. And we started writing a lot of authored pieces, doing a lot of TV work, doing a lot of analysis, a lot of policy crunching as well. And this is phase 2, where interest rate and inflation are starting to harden. And again, we found opportunities to set up and create really detailed instructions on what people needed to do. So, if I just go back to this graph, that ascent from 4 to 6.5 created some really crazy situations. For example, we came across this one case study where somebody had taken a 20-year loan, and suddenly, with this steep rise in interest rates, they found that 20-year loan had become a 50-year loan, which is absolutely crazy. And in fact, RBI had to come out and talk about something called negative amortization. So typically what happens is that when you take a loan, you pay principal and you pay interest, right? And with every EMI payment, your loan balance goes down. Your loan gets smaller and smaller. But in this case, there was negative amortization happening, which is basically that no matter what you pay in terms of EMIs, your loan still keeps getting bigger, which is an absolutely crazy position to be in. But that was the kind of extraordinary situation that unfolded between 22 and 24. And we were right in the middle of that, trying to make sense of what was going on. And we started putting out these detailed advisories in terms of what people needed to do. And those instructions were essentially in terms of managing their loan. So, we said, if you prepay 1 EMI, this would happen to your loan. If you prepay 5 EMIs, this would happen to your loan. If you prepay 5% of your loan balance every year, you would be debt-free in certain number of years. So that is what we focused on. And as a team, we also got stronger in terms of our own understanding of what we were doing. So that allowed us to do deeper and deeper research. So some of the items that you see there, aspiration index, inflation and your loan, these are our research papers that we started producing on a monthly basis. And we started sharing that with the media, and that in turn helped us improve our relationships with the media, and they started trusting us more on these matters and started approaching us more for our inputs on these kind of stories. So lastly, this is phase 3, which is what we are in. And it just continues to go on and on. And the research that we had done, the case studies that we had been able to produce, the white papers that we produced, the authored articles that we were able to do, all of that helped us compile this book as well, which came out last year. It's a money management guide. And thankfully, it hit #1 on Amazon twice in its category and went up to 345 in the top 100 rank, top Amazon books ranking. So in summary, you know, this whole situation allowed us to improve our own understanding of what was happening in the macro environment and get better as comms professionals, get better in terms of understanding policy matters, get better in terms of content creation and analysis. We were able to put out really detailed instructions that helped people at a very difficult time in our economy. There was a lot of distress. One of the white papers that you saw on the screen there, Aspiration Index, we have been doing that for a while, and you know, over the last 2 years, we have captured the kind of distress that households are going through, and we were able to put that information out pretty early. Uh, you know, there is this narrative outside that everything's fine, the economy is booming, everything's great, incomes are going up, we're going to be number 3 economy in the world, and so on. But every year, the survey told us that incomes are flat or shrinking, indebtedness is on the rise, people are borrowing more for consumption, their aspirations are shrinking, which is what we managed to capture in that index. Every year, over the last 2 years, the aspiration index, which is an annual exercise for us, it has fallen. And it doesn't fall often, it typically tends to go up year on year, but for the last 2 years, it has been falling. So all of that kind of helped us establish ourselves as experts in these matters, improve our visibility in the lending-related conversations, banking-related conversations, provided better brand visibility to Bazaar in the media. And so we became, a trusted source of information on these matters for the media, for the public. And I would like to call out my team. Nanda is here, and we have Navneeta and Ravi working out of Delhi, and we have Malvika in Dehradun. So it's a small team of 5 working on a lot of these things. I don't have a lot of information to share in this particular presentation in terms of impact and numbers and how that impacted business, but if anybody wants to talk about it, we can connect outside of this presentation. So that is all from me. Thank you so much.
In financial services, you face a challenge. The challenge is that what's good for the business may not be good for the consumer. And I may not be able to pick an example from your company, but I can tell you about insurance companies. They don't want to talk about regular insurance products. They want to talk about unit-linked insurance products all the time. Did you face a challenge like that, and how did you overcome that challenge?
So thankfully, we have not faced that challenge, which is great. I mean, management is very supportive of what we're doing. So for us, it's not just about selling these products. It's also helping people through that journey of the whole life cycle of that product. So that way, management has been really supportive, and we've been able to work on all 3 stages of that loan experience, which is what I mentioned in the first slide.
Lucky to have good leaders. Thank you.